Ladies and gentlemen, good day and welcome to the Marksans Pharma Q2 FY2024 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Dr. Dinu from Elara Securities Private Limited. Thank you, and over to you, sir.
Thank you, Siva. A very good afternoon to all of you. On behalf of Elara Securities, I welcome you to the Q2 FY2024 earnings call of Marksans Pharma. We have on the call from Marksans Pharma, Mr. Mark Saldanha, Chairman and Managing Director, and Mr. Jitendra Sharma, Chief Financial Officer. We will start with the opening remarks from the management. After that, we will have a Q&A session. Over to you, Mr. Saldanha.
Thank you, Dr. Dinu. Welcome, everyone, and thank you for joining us in our Q2 and H1 FY24 earnings conference call. We appreciate your continuous interest and support for the company. We've had another strong quarter and with our revenues expanding by nearly 70% year-on-year, and EBITDA and PAT expanding around 40% year-on-year. This is attributed to the market share expansion along with our existing customers and some new product launches. The improved margins in the quarter resulted from the focus of cost efficiencies and reduction in raw material and freight cost. We recently received key product approvals from USFDA and market authorizations from UK MHRA in the pain segment, cough and cold segments, and digestive. Our continued focus remains on strengthening our product pipeline and creating a complete offering in our 4 key therapeutic segments, that is pain, cough and cold, gastro, and anti-allergy. On the compliance front, the USFDA inspection, which was conducted in October 2023 for our wholly owned subsidiary TimeCap Laboratories, was completed with EIR status. Moving on to our operational environment, we saw improved demand and volume growth across all our key markets, and the pricing pressure is normalized for our RX products in the US. We witnessed a reduction in rates of few raw materials and freight rates compared to the last year, resulting in improved margin in the quarter. On the newly acquired Teva manufacturing unit in Goa, we are presently on track with the expansion capacity and integration of the manufacturing unit. And then a recent audit from the German health authorities was successfully completed with no major observation. We expect our revenue contribution from this unit to increase quarter-on-quarter. Building our momentum, we are optimistic about driving growth through our base business and strategic initiatives, which will maximize shareholder value. With this, I'd like to turn it over to Jitendra, who will update you on the financials, and then we can start with our Q&A.
Thank you, sir. For Q2 of FY24, our operating revenue was at rupees 531 crores, an increase of 17.4% compared with rupees 452 crores in the same quarter of last year. US and North America was at rupees 222.3 crores, representing an 16.8% increase year-on-year basis. UK and EU formulation market grew by 20.6% year-on-year basis to rupees 233 crores. This was on account of new launches and incremental market share. Australia and New Zealand formulation market recorded revenue of rupees 48.4 crores, an increase of 10.3% on a year-on-year basis. The rest of the recorded sales of rupees 27.3 crores in Q2 of FY24. Gross profit was at 278 crores, up 21.4% year-on-year basis. Gross margin increased by 174 basis points from 50.7% to 52.4%. EBITDA for the quarter was at rupees 113.9 crores, an increase of 41.9% year-on-year basis, and an increase of 11.7% on quarter-on-quarter basis. EBITDA margin for the quarter was 21.4%. Improvement in EBITDA margin was led by cost optimization initiatives and the reduction of freight expenses compared to last year's same quarter. Profit after tax was at rupees 83.9 crores compared to rupees 60.1 crore in Q2 of FY23, growth of 39.5%. EPS for the quarter was rupees 1.84. Talking about half-year financial performance, for the H1 of FY24, our operating revenue was at rupees 1,031.3 crores, an increase of 16.4% compared with rupees 886 crores in the same period last year. US and North America was at rupees 450 crores, representing a 14.1% increase year-on-year. UK and EU formulation market grew by 22.6% on YOY basis to rupees 459 crores. Australia and New Zealand formulation market recorded revenue of 107 crores, an increase of 10.9%. The rest of the world recorded sales of 49.5 crores in Q2 of 2024. Gross profit for the first half of the year was at 535 crores, up 19.5%. Gross margin increased by 137 basis points from 50.5% to 52% in H1 of FY24. EBITDA for the period was at rupees 215.9 crore, an increase of 41% year-on-year. EBITDA margin stood at 20.9%. Profit after tax was at rupees 154.3 crores compared to rupees 120.3 crore in H1 of FY23, growth of 28.3%. Growth is attributed to improved performance. However, there is an increase in tax rate in UK from 19% last year to 25% in the current year. EPS for the H1 of FY24 is at rupees 3.4 per share. In H1 of FY24, the cash from operation is at rupees 90.6 crore and the free cash flow is at minus 29.3 crore. This is on account of higher capex in the quarter. The capex incurred during the period was 119.9 crores. The investment is in line with our plan for scaling the acquired manufacturing unit from Teva Pharma in Goa, and we spent rupees 16.89 crore in the R&D, which amounts to 1.6% of the sales. We continue to remain debt-free and had a total of rupees 661 crore of cash as of 30th September 2023. With this, I would like to open the floor to question and answer. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question, press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We'll take the first question from the line of Sudhir Mehra from the office. Please go ahead, sir.
Yeah, good afternoon, sir, and hearty congratulations on super performance in Q2 as well as H1.
Thank you.
Sir, I have a couple of questions. Right, our EBITDA margin is up at 21.4%, led by increase in the gross profit margin to 52.4%. So this kind of trend, as the raw material continue to remain soft and freight rates are also soft, so this kind of margin we are able to do in the H2 as well.
We are hoping for that. Obviously, we continue to work towards that, and we are hoping that trend continues.
Great. And sir, my second question is now I believe that Teva facility is now completely integrated, and now the revenue can flow from that facility. So I think, do you expect that growth rate to be higher in H2 as well, because of Teva facility coming into operation?
Yeah. So the Teva facility is in operation, but the integration is still going on. We have we've invested a decent amount, and we have to continue investing to ensure we upgrade facility in terms of capacity. Like I mentioned in my introduction, that we do expect growth on a basis where Teva is concerned, but you will see the full potential of revenue generation only somewhere in April 24 onwards.
And can you throw some light on firstly the new product launches and the demand scenario in UK and US? If you can throw color on that, these two aspects.
Well, new product launches, obviously, we are into different segments, so there are a lot of new products. As and when a product does get approved, like we've received isomeprazole approvals, or we've received cyanocobalamin and a few other approvals, we basically we launch it in the respective markets, and we basically take market share through our distribution channels that are already existing. So it increases the product portfolio, and it obviously increases our revenue and penetration into the market. So we do see with the product approvals coming in, our revenue generation happening on those segments in respective markets.
And demand scenario in US and Europe, in view of recessionary kind of trend going on. So,
did you say demand scenario?
Yeah, in US and Europe market.
So we do see our growth drivers being in US and in Europe. We do believe this trend will continue for the coming year also. So we are quite optimistic on both these markets.
Great. Thank you, sir, and again, hearty congratulations on set of numbers. All the best.
Thank you.
Thank you. We take the next question from the line of Sriram, an individual investor. Please go ahead, sir.
Yeah, thanks for the opportunity. So just want to understand, can we expect a wagon FY2023?
We have to yet work on that, but we like in the last conferences, based on free cash flow determination, we will basically be splitting it between potential or dividends.
Okay, great. Another thing I would like to know is, how is the competition scenario in US market for PPC?
Well, it's crowded and tough as always. That's the nature of the beast. So it is not simple. Just that whatever we do, we excel at it, and we basically work hard towards getting market share, penetration into that segment, and we've got a longer history where that product portfolio or segments are concerned.
Okay. Thank you, sir, and wish you all the best.
Thank you very much.
Thank you, sir. We take the next question from the line of Ashika Jain from Ashika Stock Broking. Please go ahead.
Hi, congrats on a good quarter. So my first question is, for our backward integration plans and subsequent DMF filings, can you talk about, which products, for which product is backward integration a priority? So which are the raw materials that are more sensitive or strategically more important for us to backward integrate?
So we've taken, obviously our wish list is quite large, but we have basically selected one item on each category. So we've picked up one item in pain, and we are working on ibuprofen. Then we are in anti-allergy, we have picked up another product, and in digestion we picked up a product. So there are three categories that we are targeting, so that we have a single product in every category, and then we can expand the product portfolio from there on.
Okay, makes sense. Second question, so we are expecting US to be a major growth driver going forward, especially when operating leverage kicks in. Can you comment on what is the timeline on this and how many more launches are expecting in the US this year? And finally, from a geography mix standpoint, what is the percentage of our revenue that we think is going to be US, say by end of 2025?
I think US will be, I mean, it's a very close call because both the markets are very strong. So I think US will be very close to 48%, maybe, and between 45 to 48% by FY25, and UK will be around pretty much around the same, 40% or 42%, 45%.
Got it. If I could just squeeze in one more. So cash on books is about approximately 700 crores. Can you comment on our capital allocation strategy going forward? It's mentioned in the investor presentation. So just want to know what kind of organic growth opportunities are we looking for from a product or a geography perspective?
Well, obviously the first part of the capital deployment is to expand the capacity in the newly acquired plant, which was concluded only in April this year. So we are still working exhaustively and at a very rapid pace to scale up that capabilities to meet with our demand. So I do see some decent amount of CapEx going there, and obviously then we have M&As that we are planning in some geographies, Europe being one of them. Our plan is to expand the geographies. It's always been there. We have been in dialogue, but nothing concrete or nothing to paper or discuss about. But we are exploring M&As in Europe, basically.
Got it. Thank you so much. I have more questions. I'll get back to you.
All right. Thank you.
Thank you. Before we take the next question, a reminder to all the participants, anyone who wishes to get into the question queue may press star and 1 on the touchtone telephone. We take the next question from the line of Dr. Binu from Elara Capital. Please go ahead, sir.
Hi, thanks for taking my question. One couple of questions. In the US, how many ANDAs do we file per year now on an ongoing basis? And what are your plans? Do you plan to increase that number? And similarly, the filings for UK as well.
So in US, we are averaging or we are targeting very close to 5 ANDAs. So you can say between 4 to 5. And in Europe, we are talking of nearly 20, around 20 authorizations, you could say. 15 to 20.
Sorry, so you are basically saying that you are going to triple the rate of filings in a year's time?
Yeah, total filings. I mean, we have a big product portfolio in Europe, in UK. So it is an exhaustive. It's many market authorizations we have. So it could not be tripling it, but we are looking at definitely we have already been working on 60, 70 odd products. So we are planning to file very close to maybe, like I said, 30 odd products year on year.
Sorry, I didn't quite understand. So in the US, you are filing 5 ANDAs in a year.
Yes.
Will that run rate increase going forward to 15, 20, or you are still?
No. US will be 5 only every year.
Okay.
And I was talking of Europe.
Okay. Great. Second question, our own brands in these markets, roughly what sort of revenue would that be contributing in each of these markets in US and UK?
So we are not in the brands, we are in the generic formulations. But I mean, we have segments that we talk about. Obviously, we have the pain segment, which is still the largest for us. Then we have the digestive and cough and cold, which contributes. Then we have a substantial amount of, I mean, we have about 30% odd on prescription related, prescription-related segments that we pursue. And we do have certain brands, we have brands in Australia, we have brands in our Dubai market, in Dubai regions. And obviously we are very active in the Amazon segment also.
Understood. For housekeeping questions, for the first half, we have given a CapEx figure of 120 crore. Does that include the payment given to Teva for the facility?
Yes, it does.
And I've seen a jump in depreciation this quarter. Is that related to the Teva facility, and does it fully capture the impact?
Yeah, hi, Vinu. This is Jitendra here. Yes, this depreciation for the quarter includes the Teva facility depreciation. So we started depreciating it from this quarter onwards.
Perfect. Great. I'll join back. Thank you very much.
Thank you, sir. We'll take the next question from the line of Viraj Mahadevia, an individual investor. Please go ahead, sir.
Hi, Mark, Jitendra. Congratulations. Encouraging results. Mark, you mentioned briefly ago that you were looking at 3 molecules across different therapeutic areas for potential backward integration.
Yes.
These 3 molecules represent what percentage of the overall revenue, of your total revenues that you're looking to backward integrate?
So, about very close to 30%.
Okay. And when is the impact of that backward integration likely to get through in terms of lower raw material benefits as a result of these agreements?
Maybe mid or latter part of 2024.
Calendar year?
Yeah.
Okay, perfect. Thank you. That's all. All the very best.
Thank you.
Thank you, sir. We take the next question from the line of Vidin, an individual investor. Please go ahead, sir.
Hi, Mark. Congratulations on this set of number, and thanks for the opportunity. So, Mark, considering the additional capital that we are doing for the new facility and for the backward integration, how much additional capex do you see we are going to make an investment in the next 6 to 12 months?
We are looking between 80 to 100 crores.
Okay. So is that for any future growth, and is that the full capacity for the Teva, or we can still add a few more plants and make few more investment at the same facility?
No, obviously we can make some more investments. This is the initial onset that we had planned. Like I mentioned, close to 200 crores was going to go into facility, including the acquisition cost. So that's pretty much what we are planning to do. And then obviously maybe after a year and a half, we may have to invest more to increase the capacity further on.
Okay. And I think in the last Concall you referred to filing, spending more on the filing of the NDAs and the bit of R&D going to increase. So do you see it's going to be a significant jump, or it's going to be a gradual increase?
It is going to be a gradual increase, but it will be an increase for sure.
Okay. And the last question from my side, I think most of the do you see most of the savings from the raw material costs are there now? So any future growth will be driven by more operating leverage and the product portfolio. Would that be a safe as?
Yeah, that's fair enough to say.
Okay. Thanks a lot.
Thank you.
Thank you, sir. Before we take the next question, a reminder to all the participants, if you wish to join the question queue, you may press star and 1. We'll take the next question from the line of Prerit Chaudhary from Green Portfolio. Please go ahead, sir.
Congratulations for this set of numbers. I just had 2 questions. First one is, we are trying to file DMF for backward integration on September. Any updates on that, if you can provide?
We are still in working towards that.
Okay. Right. So any tentative dates and mean by when month we can file those DMF?
I think hopefully we are optimistic by the end of this financial year.
Okay, great. And my last question is that what would be the total expense number for our Teva facility for this quarter?
You're talking of the expense?
Yeah, expense amount for the whole Teva facility for this quarter.
Around 10 crores.
Okay, great. Thank you. That's it from my side.
All right.
Thank you, sir. The next question is from the line of Ishita Jain from Ashika Stock Broking. Please go ahead.
Thank you. Thank you so much for the opportunity once again. Given the product mix, we must have not faced very high price erosion in the U.S. Can you quantify the price erosion, if any?
It's difficult to quantify exactly, but obviously we are not immune to price erosion. There's always some price erosion happening because when raw material prices come down, so do finished goods come down. So we are not immune to it, but definitely we didn't suffer as compared to the prescription segments. But there was some price erosion, but not dramatic.
Do you think that we will be able to cushion this even further with backward integration? At least for the molecules we are considering backward integration for?
Yeah, I mean, obviously we do believe in that, and we do believe it will basically strengthen our sourcing capabilities and reliability of ensuring materials available on key molecules. So that was the objective more than anything else. That because when prices go up or when circumstances happen in the market, manufacturers tend to exploit the situation. So that's the reason why we wanted to integrate ourselves.
Perfect. And so Teva plant breaks even first quarter 25. Is this timeline still intact?
Definitely.
Fantastic. And last question, if I may. So our R&D spend on a consolidated level was 1.6%. Do you have any guidance for R&D spend, say, for FY25, FY26?
About 2% may go slightly higher, but I would conservatively say 2%.
Great. Thank you so much for the rest.
Thank you.
Thank you. Ladies and gentlemen, a reminder, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Anyone who wishes to ask a question, may press star and 1. The next question is from the line of an individual investor. Please go ahead, sir.
Yeah, thanks for the opportunity again, Mark. I think there are confluence of all these tailwinds that are coming together. Between these, do you see any risk that you should be, which might be considering the geopolitical situation and all?
Geopolitical situation, I mean, there's not much control we have out there. Geopolitical is something which I think globally is always a risk from the global scenario. The overall countries and industry that will have pretty much a direct impact if things go south. But I think pharma industry basically is quite immune because at the end of the day, people still need medications. And we are optimistic that whatever geopolitical scenarios do arise, we'll probably be the least impacted out there.
That's it from my side.
Thank you.
Thank you, sir. The next question is from the line of Mr. Agarwal from DAM Capital. Please go ahead, sir.
Hi, Mark. Two questions. One is, if you just want to recap of the portion of business for US and product H1?
We are right now trending at very close to 70 to 30, 70 and 30. US is 70 and RX is about 30.
In US?
US it may be, I'm talking of globally. US it may be slightly more would be 78.
And UK would be similar or 70-30?
Yeah, I mean, UK, the RX portfolio is slightly larger, so that's where the average comes down to 70-30.
And do you see this proportion changing over the next 3 odd years, 3 to 5 years?
I think it will be pretty much standard, maybe 5% here and there. OTC maybe 75, RX maybe 25.
And lastly, with the Teva plant being available for us, I mean, what degrees of freedom does it give you from a perspective? I mean, are you looking to push in more volumes of geographies? Are you looking to go out to more geographies? What are you thinking about it?
So basically, we are looking at the same geographies and pushing more volumes and products because of new product launches into similar geographies that we already existing. So obviously, I mean, we are talking of nearly looking at potentially doubling our supplies into the geographies that we are already existing. Whereby, that's where the growth is going to be generated because while the front end we have a strong order book status, we need to ensure infrastructure supports those initiatives and fuels the growth out there. So we do see Teva giving us equivalent amount of revenue like our existing old plant. So that's where we are investing on this capex out there. So, and it will also help us and assist us in any new geographies we basically venture into.
And the last one, in terms of the current portfolio that is supplying to US and UK, I mean, how much given project capacity from Teva? I mean, are there opportunities for you to significantly higher share that you already have and what to drive up?
Yeah, that's pretty much it, right? So we will be able to get more market share. We'll be able to service more market share because we have additional capacity and we are a reliable supplier. So we already have penetration, we already have distribution, and all we need to do is expand the product portfolio and also expand our products within the same clientage. And this can happen with additional capacity.
Sorry, this is so bad. But over the last year or so, you've had situations where didn't get up business because you didn't have capacity or the right person?
No, it wasn't that. Nitin, it's basically we could foresee that okay, our existing plant is reaching to its maximum, and we need more facility to service increasing demand. Order book status pretty much for this year, a decent amount of that is going to be basically coming out from the new facility. So we foresee that after a certain amount, we would need additional capacity to service increased demand and growth. So that's where the Teva facility comes into play.
And lastly on this one, when you're taking higher market share or higher volumes in your current products, so is it it's more about is market is growing that you are participating in market share? And if you're taking market share, what are typical kind of players you're taking market share from?
So obviously, I don't think the market is going to the tune of our growth, but we are taking market share and again product portfolio, to the portfolio, just to also add to the basket of our market share and revenue. And when you talk of taking market share from competitors or from lead companies, you're looking like Perigo and PLDs and various other top companies that are existing already there.
Thank you so much.
Thank you.
Ladies and gentlemen, a reminder to all the participants who wish to join the question queue, may press star and one.
Yes.
Participants, if you wish to ask a question, you may press star and one on your touchtone telephone. We'll take the next question from the line of Hiral Nandu from Kalpavriksha. Please go ahead, sir.
Congratulations for Mark and Jitendra for the good set of numbers. Just one question. On the brand thing, if I heard something, and correct me if I got it wrong. I just wanted to understand how we are planning to expand our own brand in the various geographies. I heard that we have presence in Australia and Dubai, I think, on the branded side. What about the other geographies?
Presently, obviously, we have a few markets that branding business can. Those markets are more branded than generics. Looking at India, for example, so that is a huge possibility. Then, you're looking at certain markets in Europe, which basically encourages branding, and you're looking at, certain other, even in the US, you have, looking at Amazon's or the e-retail type of, opportunities that exist. But I would say in branded business, the markets that we are presently in, when we talk of US or we talk of UK or Europe, they are more generic driven, and our focus is there. We may explore brands, but they are relatively very small in terms of the regular competition. And the bigger markets are obviously India, and we would explore M&As as and when we get an opportunity for that.
So the margin profile will certainly be higher in the branded product, right? Even the generic brand will give a similar margin.
Well, Hiral, we always look at expanding our margins, and we are always working towards that. The branded business does give definitely lucrative bottom lines, but that is once it reaches a certain level of revenue and optimization. Till then, you have to invest a lot of money into marketing and sales and everything. So it's a chicken and egg situation. It's not like on day one the business gives you business bottom line. It's actually a lot of investments go into branding.
Correct. And as you rightly said, even the M&A would help it cut down that cost and the timeline, so which might help.
Yes, definitely.
Perfect. Thank you. Thank you, and all the best.
Thank you.
Thank you, sir. A reminder to all the participants, if you have a question, you may press star and one. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
I'd like to take this opportunity to wish everyone on the call and all our shareholders a very happy Diwali, and have a great year ahead, and be safe. Thank you.
Thank you.
Thank you. On behalf of Elara Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.